Hey, Paul Morrow here. Welcome back to the channel. If you haven't already subscribed, please do so. Just hit the button below. Leave us comments, leave us questions. I just finished reading the Morningstar study on investor behavior going back the last decade from 2014 to 2024. It was really kind of funny. You know, I ran a financial practice for 50 years in the greater Boston area. We have a lot of great advisors that are still running that practice now, legacy financial advisors. And I will tell you, one of the interesting things about investor behavior in the Morningstar study that was just published, right? It's how big is your investment ego, right? How much do investors really believe when they look in the mirror in the morning that they can beat the indexes? And I will tell you, it's a huge problem, especially for retirees. A lot of people are great, doctors, lawyers, Indian chiefs, retirees that work for the telecom companies, union people. I mean, you don't climb down from your perch in your ivory tower as an educator or climbing down a telephone pole as a telephone worker, hit the ground at 65 and become an investment expert. It just doesn't happen. I will even tell you that the investment experts, in most cases, don't beat the indexes. And this Morningstar study actually proved the more you trade, the less you make. And they did a comprehensive look back of thousands of investors between 2014 and 2024. And I will tell you, a lot of people live in a fact-free environment and they like to deny the facts and ignore it, and make up stuff. But I will tell you, I saw a lot of people's balance sheets and a lot of people's money over the years. And as an investor, I will tell you, I do like to play with some exotic things, and I invest in some things that, my wife and I don't even really talk about because they weren't very profitable for us. However, the core of my own portfolio is in well-run funds by great managers that are largely tied to the NASDAQ, the Dow, the S&P 500, and certain other niche indexes that I like. But let's just talk about the real number. How big is your ego? Well, if you can invest for 10 years and just put the money in a well-run fund and leave it alone, don't touch it, the average rate of return on those over the last 10 years has been about 9%. Net of fees, net of costs, and all that stuff, right? And if you read the famous Vanguard study called the Alpha Study, Advisor Alpha. If you haven't read it, by all means, reach out to us. We'll get it to you. It's a really good one. One of the chief benefits of using an advisor, and this is a plug for financial advisors, and I don't do that work personally anymore with anybody, but we have lots of affiliates that are great financial advisors. One of the chief benefits of using an advisor is controlling your behavior so that you don't constantly trade and get in and out of the market and do some foolish things. The difference is 2% a year over the last 10 years. That's 20%. That means for $1 million investor, that's $200,000. That's real money. Now, I don't know how big your ego is, but I'm totally willing to give up my ego for $200,000 every 10 years, right? Because it's a full-time job. I know when I started in the industry years ago, and I went to a very famous meeting with a very famous speaker named Peter Lynch, and he was talking about how tough it was to do investing, and they had, 30 analysts and 30 traders, and he had a huge team, and this was the 1970s, and it was very successful for making a lot of money for a lot of investors. Now, because of technology, efficiencies, that's like run by, two guys and a dog under their desk, and so investment costs have come down to have professionals. It's really a great benefit, and as the Advisor Alpha study proves, one of the key reasons that you use an advisor is to control your behavior. So even if, in this day and age, you lose 0.5% to your advisor fee, which is a reasonable advisor fee, and you end up netting 8.5%, how big is your ego? Would you rather have net 8.5 than 7 doing it on your own and spending your own time and not being with your kids or your grandkids and not playing golf or pickleball or whatever you feel like doing? Use professionals because professionals don't cost you money, they make you money. This is a theme you'll see in all 3 of my books. If you get to the end of either Smart Financial Grandparenting, Smart Financial Longevity, or Smart Financial Wealth Building, you'll see that I give you some instructions on how to build a crack financial team for you. By the way, reach out to us. We have a checklist on picking a great crack financial team, because having a great financial team does not cost you money, it makes you money. And this has to do with tax planning, investment planning, behavioral management, estate planning. Those are the reasons that you hire a financial advisor, not just to pick the best, actively traded mutual fund in history. It's risk, investment, taxes, cash flow, and estate planning. So to make more money, when you look in the mirror in the morning, if you don't see an experienced financial person with 30, 40 years of experience, you should probably hire somebody other than yourself. So there's a lot of good things you can do for yourself. I mean, I like to go to Home Depot and get a little lumber and do some things on my own. But when it comes to your money, give up the ego and cash it in at the bank, right? Making more money on your money by using professionals is just part of the art of being smart.